What's up, guys? Welcome to the Momentum Trading Lab. I'm Renier, a professional funded trader, and in today's video, I'm going to show you my strategy for trading the London session. I will show you exactly which time frames to use for entry, stop loss placement, when to take profit, and when to avoid the trading session altogether. Without any further ado, let's get into it. Okay, let's start breaking down the strategy. So first of all, we'll discuss the London buy model. So there is a time aspect to this model. So the very first thing that we'll discuss is the entry will only be taken between 2 a.m. and 4 a.m. If price does not retrace into our level, then no trade will be taken and we can wait until the New York session for another trade opportunity. So the very first thing that we want to look at regarding price is what did the Asia session do? We want to see Asia consolidate. If Asia had a large expansion move, either to the upside or to the downside, then we are not going to trade the London session. And I'm going to go in a little bit more detail later on in this video. So, alright, so we want to see Asia consolidation in the Asia kill zone range. So that is from 8 o'clock until midnight. Then the next thing is we want to see price sweep the Asia lows or sweep the Asia sell side liquidity. So we want to see price action dig into this pool of liquidity. And then we want to see strong displacement in the opposite direction. That gives us a bullish market structure shift. So what you can do is you can track all these lower highs. And when we dig into the liquidity and we get strong displacement out of this level, that is the smart money footprint. That tells us that larger players absorbed all of these sell stops that was in this location, and they would want to see prices higher so they can pair their positions with the buy stop liquidity above. Right, so displacement is what we want to see, market structure shift, and we want to see price below the midnight opening price. That's very important. So now we have a valid trade setup. We have the market structure shift with displacement. Price came back into the busy fair value gap. We are in the entry time period. Now we look for opposing liquidity or opposing PD array for our take profit. So now, if from our entry to the opposing liquidity pool, that is a 2-to-1 risk to reward ratio, then you can enter the trade. So then you wait for price to retrace back into this fair value gap. You can enter right there with your stop loss at the low, and your target will be the opposing liquidity or PD array. Okay, this is the London sell model. So it's the same, it's just the opposite. So the same, we want to see Asia consolidate, and then we want to see price action dig into the Asia highs or buy side liquidity. And then we want to see that strong displacement. So the displacement must create the fair value gap on either the 2-minute, 4-minute, 3-minute, or 2-minute time frames. And if that displacement breaks into a bearish market structure, so it takes out the very last higher low, so you can track these higher lows. And then if the displacement leg breaks that last higher low, then you can look, okay, where is the opposing liquidity for my target? Is that a 2-to-1 risk to reward ratio from the fair value gap to the opposing liquidity or PD array? Then you can enter on a retrace in the sub fair value gap, provided you take that entry in the time period, which is from 2 a.m. until 4 a.m. So just to recap the checklist, Asia must consolidate, price must sweep the Asia highs or the buy side liquidity. We want to see displacement from that level into a market structure shift. Price must be above the midnight opening price. It must be between 2 and 4 a.m. New York time. 2-to-1 risk to reward ratio from your entry to the opposing liquidity, and then you can enter in that fair value gap. Okay, so when do we not trade the London session? So if the Asia session had significant expansion to the upside or to the downside, then typically we can expect consolidation during the London session. So we will avoid the London session and we will come back to trade the New York session. So typically the New York session will follow the Asia trend, but I just wait for the open to either take the London highs or the London lows, and then I will look for a setup from there to trade it in the opposite direction. Okay, before we get into the backtesting, there's just a couple of important notes that I want to point out. So this model is not going to print every day, but it should give you a couple of good setups per week. Whenever price sweeps the Asia lows or the sell side, we are looking for bullish displacement into market structure shift. So whenever we move into sell side, we are looking for longs, and then the opposite as well. Whenever price sweeps the highs or the buy side, we are looking for bearish displacement into a bearish market structure shift. So if we move into buy side and we displace in the opposite direction, then we are looking for shorts. And if we move into sell side and we displace into the opposite direction, then we are looking for long positions. Okay, let's have a look at our very first example. So I am on the 5-minute chart and I am doing this example on the NASDAQ on the March contract. So right now it's midnight. So the very first thing that I like to do is to get the midnight opening price on my chart. So I like to use the horizontal ray tool for that, which is this one right here. And I have the magnet on. So now I simply just locate midnight. I hover my mouse over the open, put it right there. Okay, so we have the midnight opening price on our chart. Now the next thing that you want to do is you want to mark off the Asian kill zone. So that is from 8 o'clock until midnight. Okay, so this is the Asia range. So we can clearly see that it's consolidating, right? So that's the very first thing that we have to look at. So we can put a box around this. Okay, we have the Asian kill zone marked off. All right, so now the next thing that we want to do is we want to mark off the highest high and the lowest low that formed during the Asia kill zone. So the highest high in this range was that high right there, and the lowest low was this low right here. So these two lines signify the liquidity. So above the Asia highs is the buy stop liquidity, below the Asian lows is the sell side liquidity. Okay, so now we have our liquidity pools marked off. We know where the midnight opening price is. The next thing that we can do is just to mark off the entry time period, which is from 2 o'clock until 4 o'clock, 2 o'clock, put another line at 4 o'clock. So these lines are normally very distracting. So I just like to put a box, something like this, and then we can call this the entry zone. Okay, so we have everything marked off. So if we look back at our checklist, the next thing that needs to happen is price action needs to either sweep the lows or the highs, and then we want to see displacement from that level. So let's see what happens here. Okay, so going into the London kill zone, we are already starting to tap into that sell side liquidity. Right there starts to dig into it. All right, and that is also the start of the London kill zone. Okay, so if we dip down to a lower term time frame, we want to observe the market structure. So right here we have a bearish market structure, right? So we have a high, a low, a high, a low, a high, and a low. So we have this series of lower highs. So we want to see price action take out that high for a market structure shift. And we want to see a fair value gap when it does that. So let's mark this line right there. Call it MSS for market structure shift. Okay, so now we want to see price action break that level. Okay, right there, it breaks that level. So we have our market structure shift with displacement. And we have a fair value gap right there on the 2-minute. And we are in our entry zone between 2 o'clock and 4 o'clock New York time. And then we have these relative equal highs right there for a potential take profit area, as well as the Asia kill zone right there. So depending on how many contracts you use when you enter this trade, you can scale out some right here at the Asia high. And then your ultimate target will be these relative equal highs or the buy side liquidity. Okay, so we have a valid trade setup. So now we just need to see, is it a 2-to-1 risk to reward ratio from this fair value gap to the target, which is the buy side liquidity. Okay, so I would personally just put my stop at this low, because if we break below this low, that will break back into a bearish market structure shift. Okay, so for this one to work, we will have to just maybe put it at that low. Okay, so this gives us a parameter within the risk model. Okay, let's see how this plays out. Okay, and right there it digs into the buy side liquidity, and you would have earned about 24 points on the NASDAQ. Okay, if you want to get the slides that I used in this video, you can find it in the MTL Trading School section in the Discord. The link will be in the description. I also post all of my daily updates in here. Yesterday we had a pretty awesome day in the Discord. We also have Illuminated Nothing. He does regular Bitcoin updates. You can chat with the rest of the community. We have a community trading floor for futures trading. These guys have been doing very well in here. Forex trading. And now we also have a dedicated crypto signals area. And then, like I said, the MTL Trading School where you can find the slides used in this video and the rest of the educational content. All right, back to the video. Okay, let's look at another example. So we come to the chart. It's about 1:45. What we want to do is we want to mark off the Asian range from 8 o'clock until midnight. What happened in this piece of price action? You can see that it just chopped around. So that's clear accumulation. So that is the very first thing that we want to see when trading the London session. Okay, so the next thing that we want to do is we need to get that midnight opening price on the chart as well. So using the horizontal ray, go to the candle that opened at midnight and snap that to the opening price, which is right there. Okay, so remember, to go long, price must be below the midnight opening price. To go short, price must be above the midnight opening price. Okay, the next thing that we want to do is mark off the lowest low and the highest high that formed during the Asian kill zone. Okay, now we have most of what we need on the chart. The next thing that we can do is just to identify our entry time window, which is from 2 o'clock until 4 o'clock. Okay, so now we are just waiting for price action to either dig into the sell side liquidity or the buy side liquidity. And then we want to see displacement in the opposite direction. Okay, so right here, digs into the sell side. It was below the midnight opening price, but we are not in the entry time window yet. So right here, we are at the entry time window period, but now we dug into sell side, but now we came into buy side. So now your narrative has to shift to look for a short position. So let's see if we can get a bearish market structure shift from displacement from this buy side liquidity pool. Okay, so this is the very last lower high, and I am on the 2-minute time frame. So for a bearish market structure shift, we want to see displacement below this low. Still going up. Okay, so if we move our line up that we used to track the last lower high, that was the very last one right there. So right there we have a bearish market structure shift, and we have a bit of displacement right there. So there is a fair value gap. Okay, so we have a potential trade. So if we enter at the fair value gap, our stop loss has to go above that high. And now we can potentially look at this low for a target. We also have these relative equal lows. Let's see if that is a 2-to-1 risk to reward ratio. Yes, it is. And price is above the midnight opening price. So we basically have everything checked off on the list. Asia consolidated. Price swept the buy side liquidity. We got the displacement with the market structure shift. It's above the midnight opening price. It's within the entry time window, and it is a 2-to-1 risk to reward ratio. So let's see if we can get an entry. Okay, so right there trips you in. It actually went to the fair value gap above. Normally just like to enter on the first one, and this is also a nice big one. Came back into that fair value gap a couple of times. So almost at the target. Going back to the fair value gap again. While we are waiting for price to play out. So the entry is taken between 2 and 4. But you can hold this position until the end of the New York session. And then ideally I would close that position. Right there, taps into the liquidity and you are out. Alright, for the next example, we are going to do the very same thing. But this time we are going to do the backtesting on Bitcoin. So right here, we are just after midnight. So we need to mark off the Asian kill zone, which is from 8 o'clock until midnight. Okay, so we have the Asian kill zone marked off. The next thing that we need to do is we need to put the midnight opening price on our chart. Okay, we have the midnight opening price. Now we also need to mark off the highest high and the lowest low that formed during the Asian kill zone. So we can see the liquidity pools. Okay, so we have the buy side liquidity right here, sell side liquidity right here. So it's already starting to move in there. Okay, and let's also add a box for the entry time window from 2 o'clock until 4 o'clock. Okay, so we have everything on the chart that we need. So we are watching to see, is it going to dig into the sell side liquidity further, or is it going to dig into the buy side liquidity? Okay, so it's obviously digging into the sell side liquidity. So now what we need to do is we are waiting for that displacement to the upside and a bullish market structure shift. So that would be the very last lower high. That was the previous one. So you have a high, lower high, lower high, lower high, lower high, lower high. Okay, so we are approaching the entry time window. Almost there. Right there, it also created a high. Okay, so we are in the entry time window. There was a high right there, and then it broke that high with displacement, but this one makes me feel a little bit more comfortable. So let's see if we can get an entry in this fair value gap. Needs to be a 2-to-1 risk to reward ratio. Okay, so if we take an entry in this fair value gap and we target these relative equal highs for our TP, with our stop at this low, then we have a 3.5 risk to reward ratio. Look a little bit closer and see if we can get that entry. Get taps into it. Starting to get a little bit of movement away. So notice the entry was below the midnight opening price in the entry time window between 2 and 4. And then you can just wait for the trade to play out to either take your stop loss or your TP. You can also start scaling out at the buy side liquidity above the Asian kill zone, with the ultimate target being these relative equal highs. Okay, getting a bit of movement above the midnight opening price. We are targeting this high. Okay, got your first target at the buy side liquidity above the Asian kill zone. Stop loss is at this low. Just move back to the 5-minute time frame. And there it is your TP. And that would have been 1.6% on Bitcoin without any leverage. All right, this video is coming to an end. If you gained any value from this video, please consider hitting that like and subscribe. And if you are interested in becoming a funded trader, check out the details in the description below. And I'll see you guys in the next one.